All right, what's going on, everybody? This is your Market Inflections weekly webinar here. One of the big things we do is send out a free trade for you guys through some of the signals here that we're porting out through our software. Again, this is Alex Bernal and Sang Lucci. We currently are selling our Turning Point Signal service. So this is basically an offshoot of Market Inflections here. We're using this software to pump out a service for swing trades for both equities and options. We're going to be doing futures soon, so stay on the lookout for that. You can check our track record here as well. And again, these are swing trades right now, so you get about 2 to 3 a week. Also, we're doing a lot of selling, writing strategies as well. And as we go into the summer, you guys know that premium suck-out trade is going to be pretty ideal for markets that are just not really moving. So why don't we go ahead and kick this off with, just kind of an update here from some trades that we were talking about last week. I think the biggest one here was the most hated makeup stock here, and again, I'm very partial against this particular stock. However, markets don't care whatsoever. We had a nice compression on the ULTA. Alex here was talking about a nice long position, and the stock hit almost 300 bucks, and it looks pretty damn good. These are all-time highs here for ULTA. Alex, what do you got on this one?
Yeah, I mean, this was kind of one of those rinse and repeat setups that I look for all the time, which is a nice cluster compression at or near all-time highs. And the reason I like this trade location specifically is because, one, we know it's going to move, and two, we know when it gets up and over any resistance and into clear skies ahead, it oftentimes, or prices oftentimes, can just rocket ship, pretty far, because it's an untested, there's no memory of price being at this level because it's brand new all-time highs. So you usually get pretty good moves there on the stock. Also, Ulta being one of these like supreme growth / retail names, the whole retail sector is just dying a slow death from death by Amazon. So these big, huge portfolio managers, they have to have exposure to every sector. They cannot just not own something in that sector. So when there's a little bit of hope in that, aka Ulta, they oftentimes pile all into the same trade.
Indeed, indeed. And guys, for these big compressions, I mean, again, like you guys look at them as consolidation periods, right? I mean, everybody looks at them as consolidation periods. You have just kind of this high end of range and you have this kind of low end of range. And once these compressions don't start coming in, this helps us out as far as timing. So a lot of you guys out there, and again, like myself included here, is that we'll trade throughout all of this, right? And since a lot of traders are just mentally wired for the breakdown or the breakout or the breakdown patterns, that's what we're always looking for. So up here, we'll look for the long trade. And when you buy calls up here, what happens to you? And go ahead and raise your hand or chime in if this is you and this is an issue that you are having. Or whenever you get a kind of a breakdown of this range, what are you looking to do? You're looking to go ahead and short this stuff. And what happens to your options when you're wrong on this? What happens to your options when, let's say, you get a little bit over-levered on it and use a majority of your count at places like this, betting on a breakdown or betting on a breakout? What usually happens is your option premium goes to absolute shit. You were sold yourself on the bias, right? You sold yourself on the idea. You were so convinced that this is the time, right? And you go ahead and you throw your chips in. That's fine, as long as you have some kind of stops, or as long as you have some kind of a safe way so that if you're wrong and if it's a fake out, aka it's not a real move, you're not completely screwed. And one of the things that, this was one of my biggest problems, I would say, and these compressions just really helped me out as far as just ironing out times and getting rid of all those trades that I would make during these consolidation periods, because I am a breakout trader. I am a breakdown trader. That's what I look for. And then when we get these compressions here, we're able to either throw a straddle out there or maybe just be, some kind of a 2-to-1 straddle if we do like the long side. And we're able to, find a better time rather than messing around and all this bullshit. All right, so continuing on here, let's talk the big boy here. Well, let's talk about Apple. Alex, why don't you go ahead and set us up here on the Apple?
So we're getting kind of this crash up in Apple, and I wanted to pay particular attention to this setup here because, like you said, I oftentimes in May, or usually when I get a chance in June or May, June, I want to lay out premium trades into the dead of summer, because every year come August, July, when the market's moving like 1 point per day or less than that, I always go, gosh, why didn't I at least write some puts or calls on something just to give me some cash flow and theta-wise during the summer months? So this is a good example of where I would look for specifically, or I'm looking at to price out tonight, possibly the 154, 158, 150 iron fly. And the reason those strike levels are important to me is I'm looking at this signal and I'm saying I expect Apple to stop trending up for at least about a month and a half. I'm not necessarily saying this is going to reverse and go straight down. I'm just saying it'll probably range, you know, at this 154 strike for about a month and a half. And again, with that theta setup, I can be right either way, right? So if it goes higher and I write the put spread, I can collect on that first. If it goes lower, I can collect on the call spread first as well. So it's really just a non-directional bet.
Right, and it's worth mentioning, guys, though, that that oftentimes, I mean, again, these are signals. You have to put them into context. If you notice down here, we had tons of signals throwing out tops here on this particular name, and although eventually here it just kind of petered out and just kind of died out, and most of the out of the money call premium will just kind of die off with it. The same thing goes up here. If this market all of a sudden breaks out, and let's say we go through 240 SPY, we go through new highs on the Qs and all this kind of stuff, that's going to put these signals at risk here. So that's kind of the level of expertise that you're going to get from us, kind of taking a look at these signals and finding the right trade for you. So this isn't essentially, hey, let's just short this freaking thing. This isn't essentially, some of the call premium is going to start to dwindle out on it. Once we find a price action that suits, this particular signal here. So that's another level of expertise that you're going to get here when we go out and push some of these trades to you guys. So let's move on to the next one here. I got to talk about this one because it's killing me inside. It really is killing me. I wanted to wait until earnings, and that's the only reason why I didn't buy this shit. That's the only reason why I didn't buy this thing. And this is how strong some of the compressions can be, as Alex said, when they're close to all-time highs. This is a perfect example of a name that was close to all-time highs, was literally right under it, compressed again after you've seen these topping signals that basically didn't work. And, I had already looked it up at Expedia, which was a name that I was trading from 130 to about 140 where it is right now. And I'm like, this price line is going through 1,800 no matter what. And look at this freaking thing, man. It's just disgusting. You're talking about 150 points. This thing hasn't even reported earnings yet, so I don't even know what's going to happen. But 150 points pre-earnings. Oh, it just killed me, Alex, man. It just killed me.
Yeah, no, it's tough when you miss setups like that, and it just takes time and watching these things to realize, hey, we're going to miss this one, but you learn what this setup was, right? It's a compression at all-time high. So now we're going to keep looking for these for you guys. We're going to try to find the next one that's exactly like this. Absolutely. And really try to hit that. Yeah.
Absolutely. All right, moving on here. We'll talk about. Let's talk about the biotechs. Obviously, the biotechs had a pretty a shitty day today. We were actually long the IBB. I got stopped out today. Let's talk about this the Celgene, and let's talk about the IBB, the compression here.
Right. So I mean, this is one of those things that I was wrong on the bios. The real play should have been to buy a straddle, but my own personal bias is this was going to keep going to the upside. The signal's not wrong. It's telling you it's going to stop going sideways. It's going to start to trend. That's all it's telling you. It's starting the trend to the downside. So, this is one of the bigger names in the IBB and the XBI, and so now I wanted to kind of parlay this into a follow-up signal on the Amgen. If this is going to be the big dog in the ETF pulling down the rest of the group, what I instantly go and look for is another like kind stock that has a signal that I can kind of pony on this thing and play off of. So
Indeed.
yeah.
And this actually goes through with another thing that, with the IBB, it had the similar compression here. We played the straddle, and it broke through a level of, a level of resistance, and I was pretty sure this thing was going to fly to the moon, and then you get these false breakouts. So false breakouts will happen on the compressions all the time, and that's why you want to have the straddles. That's why it's so important to just have the straddles, because you're going to get a big move away from the current range. You just don't know essentially what direction, and you don't know if it's going to be a fake breakout or a fake breakdown. Those are these things that you just don't know, and you have to account for by playing the straddles. There are certain situations where absolutely you can let go of one side of the straddle, but you always got to be sure, and always watch that price action and make sure you're still on the right side. So as far as biotechs going forward, I mean, IBB looks like absolute shit. I wouldn't be surprised to see further downside here in some of the pharma names as well. And IBB is comprised of, what are the big ones? It's Gilead. It's
Gilead, Celgene, Amgen,
right.
And I think Biogen are the top things inside of it. So
Right.
That's why I kind of really look for those picks.
Right.
All it took was, Trump or whoever, caused this little sell-off here, and we have a price catalyst. So, it's really, this is an opportunity to make some money here, and we just want to focus on what is kind of the best play.
Yeah, and as you can see, this Biogen,
Ugh, disgusting.
it looks absolutely disgusting here. All right, so as far as the biotechs here, I think the play is now to be on the sell call side. Unless you see a move right back into this range, which would make things even more progressively complicating. Amgen here hasn't moved yet. So I think that's why we have that one to throw up there as well. So if you notice, Amgen hasn't even made a move yet. You have all these other biotechs that are really just getting smoked. Amgen is also giving us a little signal here, a little compression, which we may be able to play here. I would be biased to the downside, of course, but I don't know. I think it's still good to play a straddle here. Okay. And moving on, let's take a look at the indexes here. Let's take a look at the IWM. Alex, you want to set us up for this one? So obviously we have this big compression here. We kind of moved through it, but we're kind of in la-la land. What's the move here?
Yeah, I mean it's made a nice move up. So initially this is initiating to the upside. It's filled this gap. I mean I'm textbook saying this is going to keep going higher, but there's just weakness today that was kind of unexpected. I really think this signal hasn't really played out yet. So those of you who saw it from a few weeks ago, buying the straddle, it's still worth holding this. We expect the move to continue to develop, and it should extend pretty far. So this is kind of slow to start, but still in play.
Yep.
I think SPY has a very kind of similar setup as well, but kind of same thing.
Indeed. All right, let's take a look at REGN. This is another one of the bio names here that has done pretty well. Would you say it's safe to say this is an upside trade, even though considering the action on some of the other names? What would you say on this REGN?
Yeah, there was there was a favorable ruling which caused this to move out of that compression. So I'm expecting this to keep going higher despite the bios. It's technically a pharma stock, so they're not really in the same sector, but looks pretty good. So that was just an idea I wanted to show you guys that I threw out a couple weeks ago how to develop. And then for a potential put right, we have these media stocks.
Let's talk. Let's set these guys up. So oftentimes when you have these big extensions down, I mean, look at this. You got a range here, and then I'm assuming there was some news on this, correct? Or was this earnings?
Yeah, no, it's earnings plus Viacom is just blowing it. They have a new CEO that just is being very hesitant to sign up with these online streaming services. Again, Viacom is Nickelodeon, MTV, VH1, I
Right.
think BETV, right?
Okay.
So they're I don't know, their advertising were down, anything, all these things happen. But
Okay.
this is a point of max fear, right? So
Yeah.
you want to
So
take
why don't we
advantage of this.
set them up? Why don't we set them up with a little free trade right here? So if we go ahead and take a look at these bottoming signals, basically what we're saying is we're not necessarily going to reverse completely here to the upside, but this price action is just going to change a little bit. So what would you recommend here as far as a trade on selling some VIAB put spreads? And by the way, we're probably going to make this trade anyway. Let's take a look at our options chain. What would you recommend here for a
Okay,
trade? How far would you go out?
I'm pulling
How much
out like
time
the
would you get?
June. Yeah, I like the June 16s here.
Sure.
And let me look at the puts
Yeah,
real
these
quick.
35s look pretty ripe.
Yeah, so you could sell the 35s for 80 cents.
Yep.
And you could possibly buy
Either 32 and a half or the 30.
Yeah.
Yeah. Yeah. Absolutely.
Here.
Yeah. And you'd get it.
That seems like a pretty nice.
Yeah,
spot.
you get a nice 50 cents of premium here. And remember, we want to write these spreads when there's actual edge to the trade. That's why they're so much more profitable. And again, when you take a look at a name like Apple, these calls, if you look at the call options here on Apple, there's so much premium caked into this because everybody wants a piece of this. You got the dividend coming out here next week, so even if you look at these Mays all the way out to freaking 160 here, you're getting some good premium. Sorry, on the Junes here. Look at all this premium here. 160s here, 165s. This is all going to cake out extremely quickly as soon as you get a pullback on this thing. So this is where the premiums are very fat. There's some edge there, and that's why we want to go ahead and come in and write these things. So you're seeing the same kind of trade here, which Alex was talking about on the Apple, that we can pull off for the VIAB. So your free trade here, sell these 35 puts for June, and possibly buy the 30 or the 32 and a half, depending on your risk, depending on your risk parameters here, how much you're trying to risk. And that would be your free trade. And these are trades where you can kind of just sit and just let them work, and watch the premium slowly evaporate. Now, as far as the stop loss here, you want to make sure you're gonna, you don't want to get stuck in something like this again. So you want to get a stop loss that's around 100%, 150% maybe of the option premium. It depends on how much time you're going out. Alex, what would you recommend on the stop for that?
Yeah, I'm kind of a big proponent of the put spread, so I usually just let it stop out at the low strike. But yeah, if you're selling naked puts, definitely be aware that you want to have an exit strategy.
Yes.
Giving yourself till June is a little bit of time to let it wiggle around. Yep. But usually that that amount of time and that amount of distance from at the money is kind of a sweet spot. So
absolutely.
The great thing about that setup is Viacom doesn't even need to move. It could open the same price tomorrow, and I bet you a lot of that vol will suck out immediately. Yeah.
Exactly. Okay, so we got Nina K here asking if we can do the the gold here. What is what's your take on gold names right now? As well as gold in general. I actually haven't been watching gold at all. There has been some options flow. There has been some call buying here on GLD, that particular ETF, and some of the other miners as well. But I actually haven't been watching gold at all, and it doesn't look like we have that many signals going on here. Alex, what would you say on the GLD?
Yeah, there's not much. There was one in Newmont Mining, do like a NEM daily. Yep. What happens when the stock market starts going up so relentlessly is a lot of these managers who loaded up on the safety trade, gold miners, they have to sell something in order to buy something. So I really think that's the case here, where they just have to liquidate something to buy more stock. So you can see Newmont hasn't really moved yet. It surprisingly stayed somewhat strong during this whole down move. So this is again something that's developing. I would look for this to pop the range and maybe play it that way. But to be honest, I really don't focus too much on the mining companies all that much. They haven't been that good to me in the past. So I just
Yeah, yeah.
forget about.
If any of you guys trade the Nugget, the NUGT, I mean, come on, like this, you're talking about heart attacks left and right here, and it's a very emotional type of trade. You know what I'm saying? These when you get caught in moves like these, or when you're trying to play moves like these, it's a very, very emotional trade. Emotions tend to fly really high, and no matter what, this always ends badly. This always ends really, really fucking badly for a lot of people that just believe, hey, this is going to keep going, it's going to keep going, it's going to keep going, and that's the kind of mentality you get. I'll give you guys a great example.
You know what they used to call that back when I was a prop trader? They call trades like that the Widowmaker.
The Widowmakers, exactly. Yeah, these are the Widowmakers.
They're beyond any rational person's risk tolerance, and it can move 50% in a week. That's not really trading. That's
right.
Reckless speculation.
I shorted GoPro on the way up. I think at around like 65, and my whole I just couldn't believe. I just couldn't believe what was happening. Right? It was just the biggest piece of shit name. And I knew eventually this thing was going to be single digits, and nobody would give a damn about this thing. But you can't. At the time, that hype was so much. It was so much, and you can't beat that shit back, no matter how much you try. And then I tried several more times, and I just gave up. And boom, look at this thing. This thing's going to be worth $1. It's going to be worth $1 or $2. The same like all these 3 times levered ETF. And by the way, the SEC just approved 4 times levered ETF. So fuck it, make it 5 times, make it 6 times, 7 times.
10 times. Let's do it. If you're gonna go for glory.
All right. Nina's got another question on the Baba. I'll tell you what's cool on the Baba, and remember, Baba has not reported yet. Baba has not reported yet. Baidu has reported yet. Baidu has already reported, and this thing is just kind of stuck in the mud right now as far as the Baidu goes.
Yeah.
But again, like you're looking at 188, somewhere around there, 182. This thing can squeeze really quickly. Some other China names perform pretty well today. If you take a look at this JD, there was some news on this thing, so this thing is pretty interesting. Maybe some of that juice can move into some of the other China names. You got to really watch for the Baba earnings. I'll tell you right now, Nina, there's a lot of call buying here. 120s, 125s, 130s here all the way out to the end of the year. So depending on how this performs here after earnings, I usually like to wait until after. Again, I mean, Alex said, I think you have a different school of thought. You're in before or you're in during the earnings report. I usually like to wait after because I don't like that volatility to mess with my options prices.
Yeah, I play the stock in this one, directly stock, so yeah. I don't mind being in before earnings. It's just such a strong name that's breaking out, that has good momentum here. So, my view is that the risk is to the upside. You got to try to make an excuse or see a signal to get in this thing to the upside.
Yeah, absolutely. And I mean, again, for some of these tech names, we are seeing these top signals. We are seeing top signals in Google. We are seeing top signals in Amazon. We are seeing top signals in Priceline. And yes, we do believe, price is going to just start to peter out a little bit, but we don't know where that high is going to be. We really don't. And we're in a market here that's not showing us that, hey, anybody really wants to take profits aggressively out here. We're not seeing that quite yet, and therefore, you got to be cautious here. You got to be cautious. So the Baba here, I agree with Alex here. Any dip you can get, I like putting some risk on for June paper, and even a little bit further out than that. Don't look for those immediate friggin', 4-point moves in one day kind of thing. I mean, you'll get paid on Apple, but on days like today, you should be taking your profit. You should be locking this shit in. I'll give you an example. For the Baba, we made the trade, and you can see the detail here. We bought the 115 Junes, I believe it was. Actually, it was the 110s here, and we bought for around 3.5 here. We covered some at around 5.5. Covered more at around $6. So we almost, at the top here, we almost pulled out 100%, and I missed some upside on this. I missed some upside on this, on this particular trade here. The stock just kept going. It hit 119. So you're not going to get them all here, but I think this option ended up going about $8 or possibly around $9 as well. So again, Baba very strong, and again, you'll get these signals as well straight to your email. You'll also get access to private Twitter feed. Anytime we're making adjustments here during the day, which we always do, you'll get those first, absolutely. So, guys, check us out, marketinflections.com. We are doing a promo service here, too, for buyers who want market inflections as well as Wall Street Jesus. So just go ahead and hit us up if you are interested in that. And that way you get access to the options order flow as well. But again, take a look at the track record, take a look at the website. Any questions you guys have about the signals, or if you have questions about the software itself, hit us up, and Alex will be glad to walk you through that. So again, just to hit you guys with that free trade there, we had the VIAB here put spreads. So we're talking about selling some 35 puts out to June. And then covering that, spreading that trade out with a 32.5 put or the 30 put. That is your free trade. Other free trades that we have given, they've done pretty well. We talked about an SPX straddle first off, or a SPY straddle first off. So you're still getting the upside on that, and that was about a couple of, I believe that was about a couple of weeks ago. Actually, during all this nonsense, it was actually during this nonsense. So that was a pretty good trade. What else did we throw out there for him?
I mean, Ulta was good. I called REG in a bit. Let me go back.
Ulta was smoking, man.
Oh, AN, dude. AN was a great example.
Yep.
AutoNation. Yep. This is sort of one of those plays that I really like to rinse and repeat. Where if you look at when we said take a look at this, AN hasn't moved, but I guarantee you the puts have just died. They've just gone to zero. So it's an advantage having a non-directional, assumption going forward that you can make money in a stock like this. I think it was a weekly play, so right now I think the premiums has sucked out too much to try to play it, but this is the type of thing that we look for. Oil was something that I think you focused on a few times.
Yep.
I've been keeping my eyes off of oil for.
Yeah, I honestly stopped watching oil, but something that Alex and I both have been talking about, and we'll throw this out there, you could consider it another free trade here, are two of the oil behemoths here, Exxon and CVX. Throughout this whole tank in oil, these two have remained pretty damn strong. We're seeing some oil bottoms now, so any pickup in oil to me is really going to spur some upside here, and possibly some squeeze, some squeeze potential here for both Exxon and for CVX. If you notice, like both of them traded really well today in a pretty shitty market, especially considering it's a shitty sector as well. So take that, just watch these two. Watch these two. It could be interesting here on the upside. I like the XOM more so than the CVX. Alex is more a proponent of the CVX. But we're going to watch these two trades here going forward. You may see us throwing out some options trade there. Some other options trades we have going on right now is we are short put spreads on the Netflix. We continue to like this stock for some upside here to 160. So I'm continuing to sell puts here on, once this stock drops and I can get it on a bit of a dip. Ben here is saying, can you have a quick look at Hess here? So he wants us to take a look at Hess. I'm assuming this looks like many of the other oil names. This actually looks like CVX as well. So let's pull up Hess here and take a look at this one here. Alex, what's your thought on this one?
I got stopped out on this last year, so I have a bad taste in my mouth from Hess. But it's definitely in the same group. So Hess, Chevron, you can make the same, depending on how you want to play it. Right. Hess has that nice bottom extension, and there's a sort of a shelf there. Mm-hmm. So, not a bad spot. I just, in distressed sectors, I found personally, it's just hard for them to sustain any meaningful up moves.
Yes.
You get these pops that people covering, but it's just not a way to get the big stuff that you really hunt for.
It's a great point. I was long this X from here. We were long Exxon down here, and actually I believe we threw out a trade for this one too. So you may let's see, did we have the Exxon in here, or was it may have been a day trade here that was January. Yeah, right here. Exxon 83 calls here, bought 55 cents, covered it $1.05, and this was when the stock was at around 82. So we covered it around 83 and change. And as soon as I got that pop, I was like, yeah, dude, I got to take some of this. So again,
Yeah, you
that's a
got to
little
take
bit of
it.
the expertise that you'll get with us too. Anytime you get this extension here and this big move, these big percentage gains, you have to take some of that shit off, because that shit is not gonna last. It ain't gonna last unless you're in some kind of a name like Apple here, or some kind of a name like friggin', you know, that people just want to friggin' own no matter what. You know, so unless you're in those names, if you're in a distressed sector, just like Alex was talking about, you got to take that shit off, man. You have
Yeah,
to.
you got to
And
you
you
got to
look
take
at
it
what the
when you
premium happened after. I mean, the premium got destroyed after that.
exactly. So it's just from experience, you know, I've seen so many sectors go distressed. Like right now, I think that for example, one of the ones I showed in the room maybe 4 or 5 weeks ago was this WSM.
Yep.
The company name
Williams Sonoma.
Williams Sonoma had a really juicy signal, and it lasted, you know, a few weeks, and it's still probably a pretty good long-term play, but the time to actually make the trade was only over the course of like 12 days.
Yep.
So,
Yep. Absolutely. Absolutely. I'm going to throw one more in here for you guys here, just you know, just for the hell of it here. And you see the Williams Sonoma here, and you got that nice upside. And then once you see these, again, this is why we use these signals here. It just helps us to take some of that risk off the table.
right.
You know, it just helps us to curb some of that risk, chill out a little bit, because chances are the premium's going to die a little bit, and maybe it'll also offer us a place to just roll to another month. That's another great strategy. Baba is a perfect example. You know, Baba just kind of went dead up here, simply because obviously she's got some earnings here. Market, you know, she put in a huge move, and now we're just kind of chilling up here at around 116. These are great places to sell that premium that you got, and then just roll the shit into the next month, roll it into the next 2 months here, because you still want to stay in these things. You know, that's a great strategy too. And always wait for these dips. You're always going to get pullbacks here, and we stress that all the time with our swing trades. One of the other ones that I want to throw out here is this freaking coach. Coach here had a very interesting look, you know, throughout this whole move, you know, and this gap and everything here. Now, obviously, they bought the Kate Spade here. That was the reason why the you know, the nice gap up. But again, this stock hasn't been here in 2 freaking years, or maybe even 5. I don't even know. Yeah, not 5 years. But this stock hasn't been here in a while. I love buying dips on this thing, so I'm looking to sell. You know, I'm looking to sell some June premium on the put side and try to make money, again, much easier here than being long call. So we'll do that too, and we can parcel out all these strategies for you. So we'll have a strategy for if you guys want to play long calls. We'll have a strategy for if you guys want to play equity. We'll have a strategy as well if you want to make, you know, if you want to go for shorting some put spreads or shorting some call spreads. And we'll throw out all those strategies for you in an email format, as well as on your private Twitter feed. So again, check us out, marketinflections.com. You guys have the link. Hopefully we'll see you in there. And also, we'll drop a little bit of news too. We are creating a chat room instance, just like we have for Wall Street Jesus. We are creating a chat room instance for Market Inflections as well. So you're going to get your own instance here. I will be in there. Alex will be in there as well. You're going to get your own tools here that we're going to build for you. So things are moving pretty quickly. So hop on board with us. We have one more question here. Stephen is saying, what is the best time to roll out and up on a long call, on a pullback, or on an extension? Stephen, man, on the extension, baby. On the extension. Because the extension is where you're going to get the best premium to sell out of your call. Frankly, the smartest way to do it, and again, but this is more of an active trader thing, and this is where the experience comes in and the patience comes in. Like if you get an extension, a sell into an extension, you know you're going to get a pullback at some point here, and if you're able to come in and buy, you know, further dated premium on a dip, and think about it too, Stephen, if you're buying further dated premium, You don't have to be a friggin' panicked, a dude that's trying to buy everything at this friggin' moment. The problem is these extensions tend to juice your emotions a little bit, and we tend to make the wrong decisions when we are, emotionally biased about a trade or our emotions are at highs. And anytime you have these extensions, that's where you're going to be. So it's very difficult to make the right decisions at these times. Now, if you're able to do it, you sell during the extensions, wait for the pullback, and buy more freaking time. That is ideally what you want to do. If you can't do that, sell during the extensions and roll on that option, because as soon as you get your pullback, you're not going to get smoked out on as much as you would if you're in a freaking front month expiration, or something that's very close dated. Alex, you wanna hit him up with some of your advice here? What's the best time to roll out of a long call on a pullback or on an extension? What do you think, man?
I just talked a little bit more about the science about what the extension is telling you. It's sort of a mini crash scenario. The market's crashing in respects to the upside or the downside. So
Right.
most of the time in the options market, that's where you see the most illogical pricing of options.
Yes.
That's where our advantage is, right? So if you just focus on making trades on the calls and the put side, when you know there's a mispricing of the options, that's where we can get the best advantage, right? The rest of the time, there's really not an edge. There's not a better chance in 50-50 that we have in front of us. So by just focusing on these key areas, we know we're putting a strong probability on our side to make a profitable trade.
All right, guys, you heard it here first. Hopefully we'll see you guys for our next week's Monday weekly webinar. Again, go to marketinflections.com, sign up. We will see you soon in the chat room instance that we go ahead and set up. For now, private Twitter feed and emails is where you're going to get your alerts. And we'll see you soon, guys. We'll see you soon.
See you guys.